pleased to have back on the program today with me Mr. Ian Gordon. Ian is the president and founder of the Longwave Group. I would encourage you to check out his website. We'll give you instructions on how to do that here in a bit. Ian, welcome back to the program.
Well, I'm happy to be back.
Ian, just for our listeners that maybe are new listeners or haven't heard your prior interviews here on the program, can you tell us just a little bit about your work?
Well, my work's based on the Kondratiev cycle. And Nikolai Kondratiev was a Russian economist who developed his long economic cycle, and wrote about it in the mid-1920s. So what I've done from his work is I think I've expanded quite extensively on what he originally had proposed. And one of the things I have done, which I think is important, so it is a long cycle. I call it a lifetime cycle because we only meaningfully experience a cycle once in our lifetime. And by meaningfully, I mean we don't really make, for the first 20 years of our life, we don't really make any economic or financial decisions in our life. Our parents are making those for us. And so it's about 60, 70 years in length. What I've done is I've divided the cycle into the 4 seasons, and I think that they are very appropriate. Spring being the birth or rebirth of the economy, summer being the time when the economy reaches its fruition. Autumn I call the feel-good period because it's always the season when stocks, bonds, and real estate do very well, and it's always a speculative period in the cycle. So people are essentially getting wealthy on the back of those 3 investments. And winter is the payback period when debt has to be wrung out of the economy so that it can start again refreshed in the spring. So each of those seasons is about a quarter of the entire cycle, so 15, 20 years in length of time. And we can usually pinpoint fairly accurately when we're moving from season to season, which I think is very valuable. Just to give you an example, 1929, the peak in the stock market was evident that we would now be moving into the winter portion of the cycle when debt had to be wrung out of the economy. Similarly, 2000, when the market peaked in 2000, was essentially the onset of winter. Now, this winter, we haven't been able to, the winter hasn't followed the previous 3 winters, simply because the Federal Reserve has been able to prolong the winter by manipulating the interest rates quite substantially, and where they're now essentially at 0, and flooding the banks with money, so that initial plunge in the stock prices between 2000 and 2002 was followed by a rally, simply because interest rates were bought from about 6 to 1%, and a lot of money was made available to the banks. And then we had a second crash between 2007 and 2009, and again interest rates were brought to 0, and all sorts of monetary programs were introduced by the Federal Reserve, TARP and whatever. And so right now the Federal Reserve is pumping about $1 trillion a year essentially into the banks, and that's been able to keep the stock market afloat. And during, but we believe that ultimately the stock market will follow the natural course of events and reflect the realities of the economy, and will be in a massive bear market and culminate possibly. We have a target for Dow 1000, and that's our writings on that are available on the website. But during the winter, because the whole system is, the financial and economic systems are collapsing, as they did after 1929, gold takes on the role of as real money, and so people move to gold because they're so frightened about everything else that's occurring all around them. So we've been bullish on gold essentially since 2000, and remain very bullish.
So, Ian, great explanation. I appreciate that. And I'll remind the listeners that if you would like to go to the website is longwavegroup.com, and there is a wealth of information there. I'd encourage you to check it out. Ian, we've got 3 minutes left or so in this segment, so I don't think we'll get through all of this, but recently we saw a huge gap down in the price of gold. Gold prices had a biggest two-day drop, I think, in 30 years. You can correct me if I'm wrong on that. Did that change your view on gold, one, and then if there's time, to what do you attribute that drop?
Well, certainly it didn't change my view. I mean, essentially, you know, the world currencies are at a critical stage right here because paper money is debt money, and I mean, to try to solve a debt problem, governments are issuing even more and more debt. So, no, you know, gold ultimately becomes the money of choice in these kinds of economic and financial disaster periods, and that's as it was in after 29. I mean, gold became the money of choice until President Roosevelt outlawed its ownership, and we're going the same way now. I really believe that the price of gold is being manipulated, and certainly that crash was manipulated. It was signaled, that crash actually was in the gold price was signaled by Goldman Sachs in January of this year when they predicted gold would go to $1,200 an ounce. So they appeared to be geniuses, but gold can be manipulated in the paper market, in the COMEX. The physical offtake of gold is extremely strong. So people and countries are buying the physical, but you can manipulate the market in the paper market. So, and that's really what happened. On Friday there was something like 400 tons of gold was sold short on Friday. Now, one of the things that I think is that short selling was probably done so that banks and so on, J.P. Morgan or whoever, who were already short gold, knew that it's my belief that something catastrophic is in the offing, and so that they knew that they were going to be forced to cover those short positions. So the best way to cover was to force down the price of gold so that you could buy it back much more cheaply. So I really think that we can see that I'm anticipating something sort of great seriousness occurring as a result of that drop in the gold price.
Well, Ian, I'm going to leave it there for this segment, and I'll encourage the listeners to stay with us because when we come back, we'll talk about what's going on in Cyprus, as well as continuing to talk with Mr. Ian Gordon of the Longwave Group about the gold market. That's when Everything Financial Radio returns. Stay with us.